Hey traders, welcome back to another episode of the Trading Edge, your weekly market outlook. In last week's video, we focused on a couple of pairs, the pound dollar and the euro dollar, the latter in which I actually got involved in a trade, paid off pretty well with target ones, and we're still holding on to target twos for that bigger move. In today's video, we're going to look at four more pairs, or four more markets, I should say, starting here with the euro yen. Now, the price movement that we've seen here on the euro yen is very similar to what we've seen on the euro dollar and the pound dollar with kind of these three-bar reversals right here. You can see price initially starting the week kind of in an upward trend, and then kind of a little bit of relief followed by some very bearish signals. Now, what I have on my radar for the euro yen here is going to be a big picture outlook. If you guys are new to the videos, some of these setups are short term, meaning kind of right away on the open, we can look at them. Some of these are longer term, so something for you to put on your radar for maybe days, weeks, sometimes even months in advance. Speaking of advanced, that's exactly what we're looking at here on the euro yen daily. It is going to be a potential advanced pattern completion, right? And we've been in a little bit of consolidation. If you zoom out to the weekly, you'll see that even more. And we know that when we're in consolidation, advanced pattern formations seem to appear, right? We came very close with one right here, X to A to B, B to C, with that C leg was just invalid. And then we had another one in here that actually ended up being a loser, X to A to B, B to C, and C to D. If you guys are new to the channel, guess what? We just don't show winners here. We show winners and losers. And if you need any proof of that, check out the little day trading step-by-step series that I've been doing as I've been taking you through some live day trading examples to give you guys a realistic look at what it looks like to be a day trader, not just trades, but kind of the mental side of things. But going back to the new potential advanced pattern formation, we're looking at an X leg right down here. So this is going to be our starting point down at 133.45. This entire move up is going to be our X to A leg. So that's the first leg of our pattern. This retracement right here is going to be our A to B leg, right? We see that because price comes to this specific zone, right, in between our upper dash line here and our lower dash line right there, which is, those are Fibonacci levels. This is just a quicker way of doing it without drawing the fibs on. We know that this is going to be a Gartley pattern, or at least the B leg of a potential Gartley pattern. We then meet our C leg requirements. Again, you can see the zone here. That bottom hash is the minimum requirement that we need to retrace to in order to have a valid C leg. The upper kind of dotted line, hash line, is the maximum retracement, meaning that if we go over or above that level, we're going to be invalid. It'll also tell you kind of invalid pattern. See if I move my little thing here. It says invalid cipher. By the way, probably should explain this. This is our pattern recognition software that we use. It's not a replacement for identifying patterns, but it is a massive help in not only making your analysis a lot quicker, meaning you can go through a lot more markets and kind of just push the button and all the patterns appear, but it also helps your learning curve as you're trying to develop your eyes to see it on its own, kind of like a coach there saying, hey, is this, isn't it? Boom, push the button, and there's your answer. So we have a valid C leg, and what we would need to have a valid D completion is for price action to push all the way back down here to 135.16. So again, this one's a ways away, but if we can push down to this 135.16 level, we're going to have a potential, or I guess we would have a completed bullish Gartley pattern, and this is the zone where you would be looking for buys. Speaking of advanced pattern formations, dollar Canada, which is where we're at now, is another pair that had some recent good luck with advanced pattern formation. You can see one right here, X to A to B, B to C, and then C to D as we have some consolidation. And this consolidation has been kind of tricky, right? This was another trade that I took, was it last week or the week before? Right around here, which ended up skunking me out, right? It wasn't a grade A trade, but it was a valid trading opportunity with our pin bar, higher high, higher close reversal right here. And then boom, me getting stopped out right away. So I guess a pain-free trade in the opposite direction, meaning that it didn't kind of play around and give me any hope. It kind of just took me to my stop loss. But since then, what we've done is we've retested this level, right? We had a nice hold right here, a kind of a fake out reversal, and then we've put in another structure high. Now, it kind of sucks because this is what our initial prediction was, this move, and the market just kind of stopped us out on the way to getting there, but such is life, that is trading. Here's a secret. I've been doing this for 16 years, right? There are going to be opportunities like this. These opportunities are going to piss you off. There is nothing you can do about it. Yes, you can learn from them, but sometimes you can do everything right and still be wrong. Such is life, such is the market, such is any business or any entrepreneurial venture. As traders, all we can do is reevaluate and reload for the next opportunity. And the next opportunity here is going to be another advanced pattern formation. Once again, this starting point right here is going to be my X leg. This initial move down will be my X to A. This retracement right up here will be my A to B. This time it's going to be a bat pattern instead of a Gartley pattern because we don't hit that higher level requirement for the Gartley. Our B to C is this kind of the right shoulder of this head and shoulders down here. And then our D completion would be right up here in our VS1 level. So we have a nice VS1 zone, visual level of resistance with a bat pattern or potential bat pattern completing in it as well. Now there is one more move you can look for here as well. Not my cup of tea necessarily because it's too far gone. But as I mentioned, this is a head and shoulders pattern, right? One with a slanted neckline. So this is going to be our left shoulder, our head, our move back up to our neckline here and our right shoulder. If you're using a horizontal level of support and resistance, it's going to look like that. If you're using a trend line, it's going to look like that. Regardless, we have broken that neckline of the head and shoulders. And one of the techniques that we teach on how to trade the head and shoulders is look for the retest. So you can see that we've broken it. We've come back down to retest. We've held and retraced so far. I don't know what this looks like on the hourly. Let's go take a look. I do all this live, so I don't do any pre-analysis with this. So I don't think there's going to be opportunity to get involved. That opportunity would have been right here, in my opinion, with this 3-bar reversal. Yeah, probably nothing to get involved unless maybe you go down to a lower time frame and then look for a fresh break of this level, a retest, and then one last move up to our bat pattern completion, which would complete right at the 138 even handle psychological number. So maybe for day traders, there's a chance to get involved in this. There's about 40 pips after the break or so, but definitely if you're trading hourly chart and above, probably just want to leave this alone, and I would say wait for the bearish setup. I didn't mention this earlier, but if we take a look at the daily, right, usually I go daily down, kind of snuck right to the 4-hour here to try to keep this video short. But if we go to the daily chart again, just to give you kind of a higher time frame perspective of what's happened on dollar Canada, is that we've had this consolidation, right? And this is why we have that bearish bias. We've had this consolidation. We've broken to the downside here, and now we're retesting that level. So the breakdown is what initially gives us our bearish bias. So this advanced pattern formation also forms or falls into that overall bearish bias as well. Next up, we're going to revisit the Aussie dollar. We're here on the daily. You can see we are trading in a VS1 zone, so an important level of structure. And what we're looking for here as the week opens up is a potential break. And I want to show you where we're at because we looked at Aussie dollar in the past for continuation setups, and it's always good to get a lay of the land, right? So if I take my horizontal line tool and just draw it at the bottom of that VS1 level, and then we look left, it'll show us exactly where we're at structure-wise here on the Aussie bigger picture. And you can see that we are below the previous level of structure that we marked as important, which was a little bit higher right here, 63.74s. And if we violate that level, right, there is potential to continue down a little bit lower. I would say this mesh point right here between, what is this, about 62, let's call it 63 evens, and about 62 even. So I know it seems big, it's in the 100 pip zone, but again, this is the daily chart, right? If you want to kind of pinpoint where the best location is at in that zone, you can use some of the tools that we often talk about on this channel. You can use your Fibonacci's, you can use your AB equals CDs, equal measure moves. You could use your volume profile. Again, I want to keep this video short, simple, and sweet, so we won't dig into that here. We can dig into it during the week, as no doubt we'll probably revisit this in the live room on Tuesday. But the point is, if we get a violation of this level right here, we do have room to push down again to 63s, which is right here, and the 62s, right? So again, obviously here on a daily chart, that's not a lot of room, but imagine yourself as a lower time frame trader, specifically a day trader. There's a massive amount of room between where we're trading right now, here at 63.60s, all the way down to 62s or wherever we pinpoint that target location to be at. Let me just do one thing because I'm curious right now. I just want to take one Fibonacci here from my swing high to swing low. I always say I'm going to keep this video short and sweet, and then it ends up being 15, 20 plus minutes long. Let me just see where our 127, boom, right on that lower line. So not a bad starting point. We'd bring in some other tools as well, but looks like the lower area may end up being the better target for this. So potential bearish breakout here on Aussie dollar, looking for sells. Lastly, we're gonna head over to the Nikkei, and we're looking here at the daily chart. First and foremost, does it look like we put in an advanced pattern formation here? I don't look at this often, but let me just see what we have here. Yes, we've had a bat pattern, just kind of building on our pattern theme for today. X to A to B, B to C, C to D, look at that. And we've done a few things here, right? We've bounced off of a previous level, let me get rid of this, of structure support. Down here, you can see these lows hit multiple times, and we rallied off that bat pattern all the way back into our most recent previous level of structure resistance, right? You can see in here, resistance, broke above, support, broke below, resistance again. And we put in some pretty nice candles to end the week, right? We had 2 bullish days up. We had an inside day. We had a very nice pin bar right here where price action tried to spike above this level and was rejected. And then we got confirmation of that bearish move, that selling pressure with the lower low, lower close. We dig into this a little bit deeper on the 4-hour chart. You can see this actually forms a classic pattern formation in its own right. One of my favorite patterns, one of the most frequent patterns you'll see in the market. Now, it's not always easy to identify. That's the problem. But this is a classic reversal pattern where we have a clear directional move right here. We have a shallow pullback. We have a shallow extension right here, which is a signal of a loss in strength of the trend. We know this comes into a previous level of structure as well because we did our higher time frame analysis. We then get a move right here, a failed extension higher. This is going to be our right shoulder. And then once we violate that neckline right there, right, this dotted line, if you're using kind of a trend line type of neckline, this solid line, if you're using a horizontal neckline, that is going to confirm our head and shoulders pattern. So a classic reversal pattern here in the market. Many ways to trade this. One is on the breakout, which occurred already. Another is waiting for the breakout for confirmation, looking for the pullback back into the previous level of structure, and then looking for the next extension down. So cool opportunity here on the Nikkei as well. More proof that if you understand the basics of how to read a price chart, if you understand technical analysis, you could be dangerous in any market, any time frame. Hope you guys enjoyed the video. If you're interested in learning more about how to trade, I recommend checking out the content available over at www.tier1trading.com. We've got some free workshops. We got a trial membership. We got all types of stuff. Get involved, join the community, surround yourself with like-minded individuals, and get started on your path to becoming a consistently profitable trader.